We're talking about interest rates there, the Vice President. What's going to happen September 17th?
Well, it depends. For sure, it feels to me like it's a live meeting. As you know, before April 2nd, before we got some uncertainties coming on the policy side, I believed that we had pretty stable full employment, that inflation's coming down to target, the economy's looking relatively solid, and that it made sense for rates to come down a fair bit more from where they are right now. In the interim, we've had mixed messages. We've had some inflation reports that came in milder than we expected, and I was feeling good because I thought if the tariffs kind of stay in their lane and imported goods are only 11% of the economy, there is a real sense in which maybe we never left the golden path. We threw a bunch of dirt in the air, as I described, so you couldn't see the road there for a bit, but maybe we're still on it and it'll be fine. The last inflation report that came in, where you saw services inflation, which is probably not driven by the tariffs, really start shooting up, is a danger. That's a dangerous data point. I'm hoping that that's a bit of a blip. So I think we still have a fair bit of information that we're going to get before September or the whole fall to determine what path we're going to be on.
Well, a live meeting implies that you could perhaps cut interest rates. Are you leaning in that direction?
Look, as you know, I don't like tying our hands ahead of time.
But I
want to get all this information. It's particularly important given that we've been getting some mixed signals. And I want to hear what my colleagues have to say going into September or November, December, going into next year. The most important thing is to figure out the through line. And the through line is either we're still on path to get rates down a fair amount. You know, let's say the SEP dot plot, where they ask all the members of the FOMC, where do you think rates will settle eventually? That's 100 basis points plus below where we are now at the median. And what will determine whether we can get back on that path of rates coming down is going to be, do we think inflation is under control? We've been 4.5 years above the inflation target. I thought, and we made a lot of progress, and I thought coming into this year, we were in a decent spot that you could make the case we're headed back to 2%. I'm still hopeful that that's true. But I'm a little, as I say, in the last report, there are a couple of little warning signs, and how we are going to react to a stagflationary direction shock. That is something that is driving down employment and up prices at the same time. That's always a very difficult spot for the central bank.
Well, I think Tyler and Mike have a question for you.
Thanks, Mike. Mr. Goolsbee, it's Tyler Kendall here in Washington, and I want to ask you about questions surrounding the Fed's independence. We just had FHFA Director Bill Pulte on Bloomberg television today. He said he's not going to let up on his campaign when it comes to allegations of mortgage fraud, including against Fed Governor Lisa Cook. Do you support Cook's decision not to resign? And do you think that this pressure campaign from the White House has hurt the Fed's credibility?
Look, I run the Chicago Fed. We're a regional bank. I'm not going to get in the middle of Twitter kerfuffles or whatever's happening. I know that long before I was ever at the Fed, I was an economist, and economists are pretty close to unanimous that having a central bank that is independent of political interference is critically important to the operation of the central bank. And the reason that they're unanimous about that topic is because if you just look at places where that's not true, where the government can order the central bank to cut interest rates, inflation is higher, growth is slower, unemployment is worse, and if we don't have an independent central bank, inflation's coming back. So I think it's absolutely critical that we maintain independence from political interference.
President Goolsbee, I wanted to come back to the broader question of the economy and inflation, too, because earlier this month we saw tariffs start to actually take effect and be enforced, and we may have more coming still on drugs and semiconductors. Where do you see this impact playing out across the economy, and how soon do you expect to see businesses start to pass these costs along to consumers?
That's kind of the critical two questions about tariffs are how much are they going to drive up prices and how long is that price increase going to last? So there is an argument that in pure theory, if it was a one and done tariff, that'd be a one-time increase in the price level, and then as an inflationary impetus, it would be transitory. But as soon as you use the word transitory, you want to be a little careful. That's only for a one and done tariff. And this hasn't been one, and it doesn't seem like it's close to done. So we can get on a cycle that is inflationary. And if the tariffs are applying to intermediate goods, that is parts, components, supplies, things like primary metals, semiconductors, things that go into the cost of production for U.S. manufacturing, that is one way that tariffs jump out of their 11% of GDP lane and start making me more nervous. Because now it ceases to just be an increase in the prices of the tariff-affected goods. Now those tariffs are raising prices in the goods, the industries that are using the tariff-affected goods. And we saw in COVID, the bigger that is, the more it's affecting the supply chain and disrupting it, the longer and more persistent that can last. So those are kind of the questions floating around that we're grappling with.
Austan, I want to go back to the White House versus Fed situation for a moment. The administration has alleged mortgage fraud against three people: Democratic Senator Adam Schiff, Democratic Attorney General of New York Letitia, and then now Lisa Cook. You were the chairman of the Economic Advisors Council to President Obama. You're a Democrat. Are you worried that they might come after you?
I didn't know where you were going with that. As I say, I'm here, member of the FOMC. The law is quite clear of what should determine interest rates. It's the FOMC, and we're supposed to be looking at stabilizing prices and maximizing employment. You become a sworn member of the Federal Reserve, you're out of the politics business. You're out of the elections business. So I'm trying not to get distracted from the basic thread of we must figure out where we are on those dual mandate grounds when setting the interest rates. And that is what we should be basing the interest rate decisions on. It shouldn't be about power politics. It shouldn't be about what somebody said about somebody else on Twitter. We go into that room and we take the job very seriously.